Have you ever felt like your bank account is a leaky bucket? You add money, but it seems to mysteriously disappear. That's inflation at work, slowly chipping away at the buying power of your hard-earned cash. Banks might say your money grows with interest, but is it keeping up with the rising cost of everything? Probably not. This video is your lifesaver. We'll explore 6 powerful assets that can fight back against inflation and actually grow your wealth, not just the numbers in your account. Not only will you secure your own financial future, but you might even surprise future generations with what you build. Spoiler alert: the last strategy is a real game changer. So hit that subscribe button and join us as we dive deep into wealth-building secrets the banks don't want you to know. God's money, like gold, silver, and platinum, holds its value because it's limited and maintains its scarcity. They are called God's money because they are found naturally, unlike paper money, which governments keep printing to cover their deficits. These precious metals remain consistently valuable since they're finite. This is exactly why experts advise including them in your investment plan. Historically, gold, for instance, has steadily increased in value. In 1950, an ounce of gold cost $400. In 2023, it soared above $2,000, and predictions suggest it might hit $10,000 by 2032. However, we must let you know that these are just expert predictions. These metals tend to rise in value when inflation is high, unlike cash, which loses value over time. If you're not keen on owning physical gold, you can invest in gold ETFs. They're affordable and offer returns based on gold price changes without the need for physically holding gold. This makes them a smart choice to protect your wealth from inflation. But wait, what's an ETF? Right, imagine you have this big box of toys. Each toy inside that box is like a little piece of a big collection. Now, think of the box itself as an exchange-traded fund or ETF. So inside this box, there are lots of different toys, stocks, or bonds all mixed together. Some toys might be superhero action figures, some might be toy cars, and some might be dolls. When you buy one of these boxes, you're actually buying a little piece of all these different toys at once. That way, instead of just having one toy, you have a bunch of them all in one box. And just like how you can trade toys with your friends, you can trade these boxes on the stock market. It's like trading your collection of toys for someone else's collection, but with grown-up industrial commodities. However, if you want to be ready for an extremely horrible economy, and I mean something out of a post-apocalyptic movie, then buying physical gold would be the best thing for you. On the other hand, while gold has historically been recognized as a currency, it still doesn't have any real use. I mean, you can add in jewelry and stuff, but that's about it. That's where industrial commodities come in. Industrial commodities like silver, cobalt, nickel, and copper aren't just valuable for their scarcity. They're also incredibly useful in various industries. For example, silver is crucial in making electronics, medical tools, and even nuclear reactors. Similarly, metals like cobalt, nickel, and copper are in high demand due to their unique properties. Cobalt, in particular, has seen a huge surge in demand since 2020 because it's essential in making batteries for electric vehicles. This surge caused its price to double in just a decade. Investing directly in these raw materials can be challenging, but there are other ways to benefit. You can invest in stocks of mining companies or consider mining-focused mutual funds. There are also derivatives like futures and options that offer exposure to these commodities without needing to physically own or store them. These avenues can help boost your portfolio during periods of high demand for these essential materials. But if you're still looking for money and not physical items, then there are still some currencies you can invest in. Safe haven currencies. In a world where currencies aren't backed by gold, stability matters a lot when it comes to money. That's why the wealthy often prefer Swiss banks. Switzerland's strong economy offers a stable place for money. The Swiss franc, their currency, is seen as a safe choice during shaky times. We've seen this during crises like the Eurozone debt trouble and the global financial meltdown. People flock to the Swiss franc when other currencies lose value. It's also become an important currency for international trade, especially when things get tense between big countries. For example, during the Russia-Ukraine crisis, the Swiss franc gained a lot of value because people used it when trading got tough with the US dollar. But not everyone can stash cash in Swiss banks. Luckily, there are other ways to invest in currencies, like currency ETF. Currency ETFs let smaller investors get into the currency game with as little as $100. This helps spread the benefits of stable currencies to more people. Or you can go for a sovereign guarantee. Have you ever noticed the words on a dollar bill saying it's legal tender for all debts, public and private? After 1971, when President Nixon ended the gold standard, the dollar became valuable because U.S. law said it was legal tender. Government securities. This meant it could be used to pay for things and became a trusted way to settle debts. Even though today's money isn't backed by physical things like gold, it's still considered reliable because it's supported by the government's faith and credit. In simpler terms, your money's stability depends on how stable the government backing it is. This is why investing in a government's promise to pay back is a smart move. Governments are usually the last to default on debts because if they fail, it affects the entire nation. That's why investing in government securities like GEX can be a safe bet. However, it's crucial to pick stable governments with good credit ratings. Remember the debt troubles Greece faced in 2009. Strong governments like the US offer securities like treasury bills, notes, and bonds. These offer better returns than keeping money in the bank and are backed by the country's economic strength. Small investors can buy these securities directly from the government through the Treasury Direct portal or from the secondary market. It's a way to invest in the stability of a government and earn better returns than traditional bank savings. But what if the rate of return just isn't enough for you? And what if you're okay taking on a little risk just to gain more? Well, then we have a solution for you too. Value stocks mutual funds. While safety matters most, investors want higher returns. Stocks can offer that, and they come in two main types: value and growth. Growth stocks, like those in technology, can be riskier because they're based on new ideas that might not always succeed. On the other hand, value stocks, like companies in industries with consistent demand, are less risky. For example, a company dealing in industrial metals might be considered a value stock due to steady demand. Value stocks with solid basics not only grow steadily, but also pay stable dividends. Yet digging into every stock's details can be overwhelming. That's where dividend-focused mutual funds like Vanguard High Dividend Yield Index Fund Admiral shares come in handy. They're good options for regular investors. They have a history of paying steady dividends and make investing in value stocks simpler and more accessible. If you want an asset that'll never depreciate and something you can use no matter how bad the economy gets, then consider investing in land and real estate. Land and real estate accountants see land as a valuable asset because it doesn't lose its worth over time. Land has always been crucial. We use it for homes, schools, farms, and businesses. With a growing population, the demand for land keeps going up. The buildings and spaces on land, like homes and offices, are always needed too. This makes land and real estate great ways to protect against inflation in your investment plan. Looking at some numbers, housing prices have tripled between 1992 and the 2020s, even with a big drop during the 2008 housing bubble. So having real estate in your investments can be helpful when the value of money drops. People often think about real estate later in life, mostly focusing on their own homes. But owning a piece of the commercial property market is a smart move at any age, and you don't need loads of money to invest in real estate. You can go for REITs, otherwise known as real estate investment trusts, which work like mutual funds but for real estate. Another way is to borrow money to buy rental properties. The rent you get covers expenses and mortgage payments, giving you some profit. It's a way to get into real estate investing without needing a huge pile of cash up front. Now, last but not least, collectibles. Collectibles like vintage cars, rare art, luxury handbags, limited edition watches, and iconic first edition books belong to a special category of assets. While regular cars lose value once they hit the road, vintage cars work the opposite way. They become more valuable over time, just like fine wine. Take a look at the 1967 Aston Martin DB6 Volante, for example. These bad boys are easily going for over $1 million. While it might seem out of reach for average investors to dive into collectibles, online marketplaces offer a way to sell rare items like baseball cards, comics, or action figures. If buying the whole item isn't feasible, platforms allow partial ownership of collectibles, making investing in these valuable items more accessible. But what do you think? Do you have any assets you think are better and safer than cash? Let us know in the comments below. Thank you for watching this video on 6 assets that are better and safer than cash. If you enjoyed this, please give it a thumbs up and subscribe to our channel for more personal finance and investing related content. Here's to becoming rich and financially free. It is also important to share this video on WhatsApp and other social media platforms because it can transform lives. And by doing this, you help us reach more people. God bless you for doing that. Stay tuned for the next video. You are blessed.